All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for October 24th, 2023. Hey, I just wanted to update you on a few things. I'd put some messages on Patreon. A lot of things came together today, and I want to just bring you up to speed. First, got off the phone with the editorial team at Steve Gordon's business, and we should be ready for sales here within 48 hours. Everything looks good. Just waiting on the final text file to be able to publish the digital version. So there's 5 projects I announced today. One of them is, so the book sales page is up, but we're just waiting for the file to be able to distribute. That's going to be book 1 of 10 that we have in the works. I've got the outlines of the other 9 ready to go, so I'm going to set an ambitious goal of having the other 9 books published by Easter next year in a logical sequence. The first book, though, is the hard one. That's the Foundations of Trading, or Foundational Trading. So that one has 4 authors. Me, my brother Bill, Phil Wu, and Griff Cooper have put a lot of work into that. Now, there's about 14 or 15 chapters in that thing. Phil and Griff and my brother each have their own chapter in there, which is sort of the student application of my work, and I think I wrote 11 chapters of it, covering, values, beliefs, systems thinking, intellectual heritage, background, key concepts, overview of some systems and processes, a little talk about creativity and true storytelling, but essentially describing how we take an industrial production approach to trading, which allows us to adopt a continuous improvement. So each of those chapters was written in such a way that it can lead, about 9 of them will lead from an introductory chapter that's in that book into a full-fledged book all of its own. And so that's where those next 9 books are coming from, where we do a much deeper dive, including books that the 3 guys are going to write, Phil and Griff and my brother. Each of those books is being written in such a way that it's easy to do a workshop on them, in the same way that book number 1 is going to have a book club workshop on it. And then it may lead, if there's interest, into more detailed applied coaching. So I want to talk now about the workshops and the coaching programs, but I want you to see that this is very much like a SSC or an Acorn. That central idea branches out into many manifestations, which become books, which become workshops. So it's very much like a layered approach to accessing the knowledge, the top level piece, and that leads to the level of detail that you may be interested in. I want to talk about the book club. So this one's going to get pitched at $297, and I think there's 15 chapters in that book. So what we're going to do is we're going to do 1 chapter per week, in which the guys who take that workshop read the chapter, submit your questions, and then we do a recorded 90-minute Q&A session to do a very deep dive on each chapter with the author who wrote that, and then that's going to get recorded, and then you're going to have lifetime access to that. And so that is going to be a very powerful way to acquire the foundational knowledge that's in book 1. In the future, My intention is to release the recordings of those discussions as a home study course so a person could then take an abbreviated home study course where you're just listening to those tapes at some reduced rate. Or if there's interest, that we continue to do that with live cohorts where you get your personal questions answered with the authors. So there's going to be two forms of how to take that one in the future. The one where you're just listening to the recordings will be less expensive than $297, but the $297 allows you to do collaborative learning and to get your own personal questions answered. So that's what the book club is going to do. And I think we can have that going as soon as the first week of December, assuming that we get this book published here and within the next week. The next one I want to talk about is the Research 2023. So what we have on that is about 15 of my students who have all been through Foundations, Creativity, Advanced Day and Swing, and Core, have come to live research weekends. Everybody who got invited to make a presentation there, of those 15, have been students of mine for at least 5 years. And there's a few extra guys who have less than 5 years but did such great work in the Foundations course or the Creativity course that they produce things of great merit that I want them to share in public. So we're going to have something like 20 different presenters plus me. And what I did this past week was I went back through the Foundations course and the Creativity 202 course for the last 2 years, and I pulled out about 100 hours of the best of or the greatest hits. And so I've got about 30 presentations in there, plus the presentations from these guys. And this is very much like graduation exercises. There's pro money managers in there, there's long-term students. And so the combination of how people are taking our material and applying it in the real world themselves, you're going to get to see their process, understand their systems, and then be able to ask questions, which we will then do in a recorded Q&A session with each of those presenters. That full set of presentations plus the Q&A is going to go into a workshop on Rizuku in the OWL group, which you then have access to. And that's going for $497. And we're going to do that each year because what happens is that guys who take Foundations and Creativity and then are going to participate in some coaching end up coming up with very interesting systems and insights where they have adapted our material. And my intention is to continue to do an annual research workshop like that, where they get to publish their material and then everybody else gets to go to school on the hard work that they've done, very much like a black belt test, if you will. So that's going to continue to be an annual research workshop, and my intention is to continue to pitch that at about that price level. That feels correct. If you're one of the guys that has gone through all this and done all the work, the price you pay to attend that is to do the work. So there's a payoff by continuing to work on not only are you making money on the systems that you're using and developing, but you get a little benefit by getting in to attend. So the next two things I want to talk about is an annual small group coaching project where my intention is to build small cohorts of about 4 people, and then have a year of weekly office hours. And each one of those guys is going to have some project or project that you're working on where you are adapting your stuff. And then you come to the weekly office hours to give a quick, 3 to 5 minute update on what's going on, where you're stuck, any insights that you have, and we're using a true storytelling format to keep that thing moving. And then there will be synergy among the groups of guys that are working together. And so there's going to be 52 weekly sessions of office hours, which typically run 60 to 90, not more than 90 minutes, but 60 to 90 minutes of check-in, where I'm doing coaching and commentary across the board. But this is a great way to do accountability groups and get some of my personalized coaching. That's for the annual small group coaching. Now, I decided there was a couple guys that talked to me that they would rather work on their own, whether it's proprietary information or they're naturally shy or whatever. I should finish up by saying, so in addition to those weekly sessions, 1 week of the month is going to be a monthly summary where you do a one-page check-in, and then a quarterly update, which is 2 to 3 pages of summary updates, and then that could easily lead to the annual research weekend where you present your stuff at the end of that as a graduation exercise. So that little process of weekly, monthly, quarterly, and annual coaching is primarily, I think, the coaching program I really want to emphasize, because I really have a strong belief in the power of our accountability groups and collaborative learning. But I'm also going to implement an individual coaching where you're working on your own project, and what I'm going to give you is 10 sessions that do not expire, so you get like essentially 10 coupons, and we will do a design meeting in session 0, where we agree on what your proposal to look like is, and then what is going to be due on the first check-in. And then however long it takes you to do that, when you've done that work, you just coordinate with me and get on my calendar, and then we're going to do a concise 15-minute, but not more than 30-minute session where we review the work, and then we agree on what the next deliverable is going to be for session number 2, and then that leads you to a 10-session project or projects, but you're working on an individual basis, and there are some pros that I work with that need to be able to do that individually. So I will make some time available to do that. So those are the 2 primary methods that I'm going to use for coaching. Now, I'm going to continue to do the Foundations course, which also has weekly check-ins, and then also the Creativity 202 course, which is a series of 30 lessons, and really these are self-paced, and I'm just running multiple sessions for Q&As in there, and you just attend those as you go. So these 2 are the content is kind of already driven. Like in the Foundations course, you're learning to what our ideas are so that you can begin to apply them and adapt them. In the Creativity 202, we're using true storytelling and story science to raise the energy of creativity, which gives us the juice to learn here, or it may help you learn other adaptations or give you great ideas for transformational learning. And then the annual small group coaching is what I just described here, and that is where you are providing the content on your work in progress, and we're using the structure of the coaching framework for you to work on the thing that you're working on. So you can see that's a little more advanced because more of the content is driven by specifically what you're working on. You're not trying to understand my work so much as looking for ways to apply it in your own workspace. And then the individual coaching is something where if you needed individual work because of proprietary reasons or basic shyness, whatever that may be. So that's what 2024 looks like and the path ahead. But I also just wanted you to know that the book club is going to be, I think, the best way to get into that book and leverage it. It's a great way to get clarifications. I think it's an inexpensive way to really get your hands wrapped around our basics. And it leads naturally into the Ableway Tech courses for CATA 2 and the systems development. And it's a nice introduction to foundations as well. But it's also going to lead to another series of detailed books. These are more like owner-operator manuals, deep dives into our indicators, systems definitions, specifics on core swing and day trading that go deeper than the foundations do. And that's going to bring a little more structure to what we're doing. And then the pattern for workshops is still going to rely a lot on the idea of home study courses with recorded lessons that lead to questions and answers sessions where you're asking your specific personal questions, which then get recorded, which then go into the course to make that even better, and then lifetime access for those. We think that's the right way to do it. And then if you're interested in the coaching, that's where the things like foundations, creativity, and the annual program will round out our offering. So just wanted to bring you up to speed on that. The links to sign up for those things are on Patreon already. My anticipation is that the release of the book is going to generate a lot of interest in that, and so I don't know how fast the slots will fill up, but they're not unlimited. I will accommodate as much as I can, but just so you know. I also put a link in there for folks had asked me, hey, how can I contribute some money to the Soccer Academy, our leadership program here in Leavenworth? And there's the link is in there. It lets you put standard amounts in for one-time contributions at those levels. If you want to contribute a different amount, just get a hold of me and I'll square you away on that. So that's what I wanted to cover as far as some housekeeping. All right, let's go ahead and jump back into the regular workflow, and we'll begin as usual with the advanced hybrid trading 30-minute swings, and we'll start with Alcoa. So Alcoa was a 1-2-3 entry and a fractional win. There just wasn't much there, and then it kind of droned on for the rest of the day. So fractional win, not much to see there. AI had a great day. There was a gap up. It closed here. There was a gap up when it moved a risk box off the low of the day, and it had cleared this hump. This I treated it as an emerging dragon. It had an immediate run up, and I gave it a 1-2 exit for like 2R, and it held like an intraday CATA 2 right around the VWAP, and so I re-entered, and I liked that. I liked the way it closed. I liked that we had a buffer here, and we picked up an extra +1, so we were net 3 for the day, and holding that one position overnight. Was really happy with AI. Amazon, late in the day. Okay, so Amazon, I missed the run up. I missed the sell off. I did treat this as kind of like a CATA 2, and I took essentially the dragon skin entry that I've been talking about. I'm really starting to like that on the 30-minute chart. When the 3-minute looks correct and you see that set up on the 30-minute, it's not bad. I like the fact that the Bollinger Band mean of the river, the middle of the river, had started to roll up as well. So the longer-term trend, which had been down, bottomed out in here, and then this felt like a turning point. So rather than wait for the PSAR to cross, I got into that about 90 minutes earlier. And in this case, it paid off and closed well, and that closed about 1.5, and it's above the resistance of the hump of the RL10s, so that was one that I was willing to hold overnight. Caterpillar, no trade. Cliff, I just missed this one altogether. There was a large gap up, and then a sell-off, and then a resumption, and I missed all of that. I missed the retracement. I finally woke up, smelled the coffee, and I said, well, there's a intraday CATA 2 standard risk, and that closed really well for +2, and overall, the fact that it was up 8.9%, I should have been able to do better than 2R, but I'm happy to get it, and I'm happy to hold that one overnight. I think that could be the start of something big for tomorrow. CVS, this was a multi-day short that we closed when the market started going up, so we captured 1, 2, 3, 4 on this series, and then it ran up to the Bollinger Band mean. And then as that started to collapse and the RL10 was rolling over, right in the middle of the dragon, I took the short with a standard risk box here. And the exit was on the far side of the river, of the Bollinger Band mean. So I said, well, that's something. And then it really didn't collapse much. It gave us about 0.5 of an R, and then really just started droning along. So I didn't want to hold that overnight. Exited in here. And then in the last hour, it resumed a little bit. So I felt like we got what was available out of that. And the fact that it did not collapse today shows some promise for a move for tomorrow. But then again, a lot of things set up just like that. That's not unique to CVS. This is Disney. And this little rollover and a PSAR collapse, and we're 90 minutes into the day. It was going down while the market was going up. So we got short with the standard risk, sold off harshly to here, and then this is a 1, 2, 3 exit, right vicinity, the skin of the dragon, which is right here. So we were happy to collect 2 and no overnight risk. It continued to pay off pretty well, and I feel like we got it right at the turning point. So that feels like a pretty orderly trade in Disney. Dish Network, we closed the yesterday's short. It gapped up a little bit, so it gave back about an R, but we were able to collect about +3. I missed the morning hook that ran it all the way back up to here, but after the R10 rolled over and it came to the edge of the dragon and started showing weakness on the 3-minute charts, I went ahead and ventured the short right there with the standard risk. It closed at the low of this run after a PSAR flip, and we were holding +1 on that overnight. So I decided to hold that one, looking for another fail in the morning. It's Dish Network, and it's been weak. So that's one that I'm holding over the weekend, or overnight, excuse me, over the weekend. Dummy. No trade in Devon was no trade in Electronic Arts. Emerging markets. This was a continuation CATA 2 because you have a swing low. We cashed that one yesterday. It closed here. It gapped up to here, started taking off, put the entry on it, and it closed pretty well. I just held my nose, and I felt like today was a turnaround day, and we had a 2R cushion. So this is one of the rare moments that I will hold EEM overnight, and it's only because I have 2R, and I felt like the rest of the market was, as you can see, pretty much in the green and had some large movers. So I'm treating today as day one of a turnaround and hoping for momentum tomorrow. Ethereum was a gift at the open. This is one that we started yesterday on that breakout from that consolidation. Yesterday it gapped up, so we bought it. It closed really well. And then today it gapped up to here, ran all the way up to here, and then sold off. And that was just too much of a good thing not to cash. 4, 5, 6, 7. So that's +7. And I exited here because I needed to cover. There was a 4R gap against us, and so this helped me offset some other losses on something we held overnight yesterday. It kind of just monkeyed around in here, and the fact that it did not fail further lets me believe this is a zero state, and I'm ready for a sharp move in either direction out of this consolidation tomorrow. But I certainly am grateful for the 7R payoff. This is Mexico. So yesterday we had that, we cashed that. When I tried a continuation, it really wasn't going anywhere, so we cashed half an R. I tried the short side, it really didn't pay off, and that was about half an R. So out of this tactical trading, maybe we netted one, and it just closed inside this zero state. It showed some afternoon weakness, so I'm ready. I'm always ready for a move in either direction, but this one especially looks like it's in play for tomorrow. So we took our R and went home. Brazil, same thing. We kind of scratched the short from yesterday, which was over an R in our favor, and then it scratched today. I didn't have a zero state mentality. I missed the morning hook and the sell-off, and then I took the afternoon CATA 2, standard risk, holding plus 1R. I like the way it closed, so we'll hold that one overnight. Intel, missed the morning hook, afternoon CATA 2. I'm sorry, I forgot to mark this one up. There was a short from yesterday that we ended up missing most of that move, and we were able to salvage one out of that one, but I left a lot on the table. I was back in the zero state by the afternoon, and so that's a venture for tomorrow. IP, we closed the short for 2R, reversed a half an hour later on the SSC. It closed really well. I like the fact that there was absolutely no selling pressure during the day whatsoever, that it moved into the summer, that the PSAR was rising, and that this feels like an opportunity for day one reversal. So I wanted to hold that tomorrow in case we get a favorable gap. IYR, on the other hand, I took the half an hour gain after a quick run up, and then it started selling off, and I just steered clear. That's IYR. KO, this is the one that hurt. So just remember, this is always the potential. This is where it closed yesterday, and we were holding 1, 2, 3R. So we were plus 3 and thought we had a cushion, and then it gapped negative 4R against, or 4R. So this turned out to be minus 4. That's a 7R swing. And then I was kind of shell-shocked until we got to here, and then it caught fire. So we got 1R back on the revenge trade, but that's what'll happen. KO was just a big gapper today, and that's where I needed the cash from ETHE to offset some of that. So just be advised, that's the nature of the swing trade and why it's fundamentally different from the intraday and the hybrid swing. That taking that overnight risk is the randomizer. All right, so this is yesterday we took a short in KRE on the PSAR flip. That one paid off today. Now, if we had not taken that and just waited for this to collapse, we'd have gotten an entry somewhere around here. So there was a micro improvement by taking the overnight risk. But in a lot of these, again, the intraday move gives you enough advantage that maybe you don't want the overnight risk. So you should include that in your consideration. So this one netted 2, closed pretty well. Mattel, we closed the 2 position short. The second position, which we took on near the end of the day, was a micro loss, but we picked up 4R from the initial buffer. And then on the CATA 2 entry, we picked up an additional 1 to offset this loss. So overall, pretty good result. McDonald's, CATA 2 entry holding. Merck, no trade. Microsoft, We took the intraday short for half an hour, the intraday long for half an hour. It was really so dormant that I didn't have a directional bias, so we just took our one and went home. Marijuana, this is a front run of the SSC, basically taking that like the dragon entry that I've been talking about and cashed one after a pretty nice move, but no overnight risk. NVIDIA, we closed 2R on this one when it didn't look like it was following through, but then it didn't fail, so I tried it again, put it back on. We recaptured 1R, and I'm holding that one overnight. That's a late bloomer. Clean Energy, short for one, cashed Rivian, no trade. The S&P was basically a sideways nowhere, but it did have higher lows, so I take that as a favorable. Treasuries, I initiated the COTA 2. That closed really well, holding +1. Tesla, well, I missed the morning hook on the swing, but got the rebound and cashed one. I don't want to be holding that one overnight after today's stability. U.S. Steel, we got in two wedges here. There was a gap up and go. I cashed at the VWAP for one. Re-entered at the same price 2 hours later, so I just treat that as one trade, and then I closed it just in time to miss the afternoon run-up, and that netted an additional one. So overall, pretty happy with the performance today. Sniper trades of the day. Is it this one? Yeah. All right, so this is yesterday's price action, and you can see the Bollinger Band mean comes into the middle, and it closes in this really tight wedge in this area right here, right? And so what I'm doing on this one is in the afternoon trade. Let me scroll down a little bit here. So that wasn't the, that's when I started stalking. So this is like coming out of the lunchtime and the sideways quiet channel that you get in lunch. And so that channel turns out to be the width of the MMRB. That's an MMRB width right around the Bollinger Band mean. So there's two ways that you could trade that. One of them is you can take the MMRB and straddle that channel and then simply take the breakout in either direction and say, hey, if it breaks north of here, I'm long, and if it breaks south of here at 1, I'm short, and then use the full MMRB and that full channel as the noise. That's one way. If you were to do that, then you would be short at 1. A second way to do that is to take that midpoint of the Bollinger Band mean and then simply stack an MMRB on either one of those. Then what you're getting is a breakout at 2, or if it breaks out here, you're breaking out that way. And then you use that risk box for this trade or this risk box for that trade. Either way, one is more conservative than the other. A third way to get this would be to wait for that OR, the equivalent of an OR3. You wait for the 3-minute bar to cancel, or to close, and then when that next bar breaks down, you essentially get like an OR3, except that this is in at 1:45 p.m. So this is not the OR3 from the opening, but it's like an OR3 after the lunchtime consolidation. It treats it like a pseudo opening. So I use a 3-minute bar breakout and then play. So those are 3 different ways that you might think about trading out of a Z3 pinch using this structure. Now, this is what it looks like if you adopt a WMB3. Well, you get this harsh move down here, and en route to that move, this one big candle right here is enough to drive this to oversold conditions on Williams percent R. So that means we then go up to the MACD histogram, and then we start looking for the uptick in order to frame the recovery trade. So these, in this case, the MACDs are all still getting deeper and deeper, so there's no uptick. The first place you get an uptick is in this blue circle where you have this uptick. So when this second bar closes in the MACD, that waits for this bar to close. When that closes, this bar prints and you see an uptick. So now you go up the stack and then you put an entry just above that bar, and then you make a decision on where your stop would be. This would be an MMRB. This one would be at the PSAR flip or the R10. So that's so close that it almost doesn't matter. And so this would be not only the WMB3 entry, but it also happens to be an SSC entry. So there's a lot of reasons that you like this entry. You might have been, if you had taken, I should have said, on these three were all logical exits for any of the entries that you might have taken here. When you get this move down and it starts to reverse, you don't mind this one because it's no longer overbought and it's already started to move off the bottom. And depending on where you entered, you might just use a money management stop and take one as a sniper exit. 2 is a 1-2, and it takes out the high of that second bar. So that's a 1-2 exit. This is a 1-2-3 exit, and it's also the skin of the dragon. So depending on where you entered, those different stops, 1, 2, and 3, might be attractive. So I think you want to download that in order to study those different ideas so that you realize that you really do have choices in how you might want to implement entries and or exits as you try to find a thing that fits with your skill level or your risk tolerance or your comfort zone. By this time, we're formally into the rule-based SSC and WMB3, and either one of those techniques gets you to this entry and gets you to approximately that risk box. By the time you get this move here, then no matter where your stop was, you should probably be up to here with your no lose plus dinner for 2. And then as this continues to work its way up the stack, you can then simply adjust your stop as needed, whatever your rules are. You might be using, I think from here, you want to be at least here, and then use either the PSAR, the skin of the dragon, the spine of the dragon, or the upper skin of the dragon as your trailing stop in order to lock in gains. And then when you see that little consolidation, as this starts moving up, that's when you can move your stop to here. And then, so if it was here, you might have adopted this progression, 1, 2, 3, and then maybe even up into there. So there's a number of different ways you can manage that. And then this is simply an orderly dragon skin exit on one position. So notice you got the R10 is winter, spring, summer, and then you get that peak and then a lower high, and then it rolls over and closes at the previous bar's low. I'm not offended if you take that as a 2-bar low exit because you recognize the R10 rolled over, or if in the next bar you take it where I did at the skin of the dragon, you give it one more chance to recover. When it doesn't, you're happy to take that. And then on your risk box here, you get 1, 2, 3, 4, and some change. So that's about a 4R trade just out of this. And then you may or may not have done any of that. But that shows the power of the SSC and the WMB3. Check or hold. And then the rest of the day, it just kind of monkeyed around. All right, here's one in Tesla. So let's see what we have here. So that was yesterday's close. This is yesterday's close right here. Now, when we get the opening, I still will take that as lows, and then if it starts moving up, I already treat that as qualifying as the sell-off on the Williams %R. So I can move straight into the uptick. And now as I'm looking at this structure, you get the gap up to here. From here, gaps up to here. And then it gives you this OR3. And then it actually closed right here. It opened right there and then didn't violate, because otherwise I could be short looking for that. Instead, it runs straight up the stack and gets out of here at an OR3 entry on the long side. And now notice how small, even in Tesla, that's like $1.25. That's what the MMRB looks like. That's how big the gap was and how big the OR3 was. That thing was actually, from the close to the peak of the OR3, that was 4 MMRBs. So I'm happy to take that entry there. You might have also, off the low of the day, picked an MMRB here and then tried for that intra-bar long. In this case, I was happy to just take that one and wait for it to actually make a new high of the day. So we're long here. Check or hold. So the R10 grind. Now, when it makes that much of a move, it finally gets traction. You know, it feels like it's just trying to, it's trying to get traction. So my stop is can be in here. That's pretty tight to try to get a no lose. I'm content to let that just work. But when it makes this move up to here, then I feel like I can take my stop and move it to about here. You know, your mileage may vary, but I don't mind this, and then jumping it up to here, and then treating that as my no lose plus dinner for 2. I like to give it some room to do some work. Now I notice the R10 wiggle, and I should be thinking about an emerging dragon. But it peaks and starts to roll over again, and then gives me the skin of the dragon, and then I'm happy to just take that gain against this much risk, which is about 2.5. Notice that that move, the gap up and the move to here, was enough to take the Bollinger Band mean, which is this dashed red line, from here, and then turn the slope positive. Notice that the RL30 crosses the Bollinger Band mean here, and now the RL30, which is also using 30 bars, is up in here, and this is the deviation between the RL30 and the SMA 30. That's how much value was created. That shows you how much more adaptive the RL30 is to the Bollinger Band mean, the SMA 30, and it gives you a sense of how much abnormal gains you got. Now, if that were to, if that starts to roll over, then we're thinking it's coming into owl territory, either as an exit or as a potential setup for the short side. So this is I take this as a collapsing dragon. Why? Because this is a violation of the RL10 here. The R10 rolled over. That blue circle shows the P1. You have the R10 crossing the RL30 outside the river. The R10 crosses the dragon, or enters the dragon, crosses the dragon, flips the PSAR. The PSAR flips, so that's a collapsing dragon. My first target is down here to the Bollinger Band mean. The second one is the low of the day. Third one is to close. So I have 3 reasonable targets for that move on the way down. Check or hold. The fall turns to winter, and now it's starting to stabilize. The RL, or the Bollinger Band mean, I should say, not the R30. Now, the when this crosses, you'll notice that the R30 crosses the SMA 30 right here. So now we have a short side bias, and when this collapses, if I'm not already short here, then that's a legitimate short signal as a collapsing dragon, and I'm still looking for the low of the day or closing of the gap. But because we got the entry here, by the time price gets to here, I can be getting my stop. I should be at least down to about the PSAR and have at least locked in that much. I might have moved sooner, like right here, and gotten that, but you got to suit your own taste. This is a PSAR exit, and it sets up an SSC going the other way, and scratch, and stop and reverse, because the last trend was down strong, and that earned 1, 2, 3, and this rejected the Bollinger Band mean, and the PSAR flipped. So that size move, it could be this move, and it could be coming all the way back to yesterday's close. And I cashed 2 and was happy going into the lunch with that. So that was about 6 out of Tesla on a sniper trade of the day. I was pretty happy with that one. This one is Tesla in the, I think this was the morning. Yeah. So, or no, this was the afternoon. So this is the afternoon trade. And that other one is the one that sold off, that we were happy. This one gives me, here's the, this sell-off triggers the oversold on WMB3, so I read up. And then at this location, I see the first, whoops, I'm sorry, at this location, I see the first uptick. But when if I put that long, this one doesn't trigger because it didn't break above the high and it made a new low. So that's not an entry. This is still an uptick, but this one made a new low and it didn't take out this bar's high. This one, however, made a new high, or a higher low, I should say, and it's still an uptick. So now I put the mechanical entry just above that one. This becomes my entry bar, and my MMRB takes it all the way down to here. So this is what the WMB entry looks like. It actually front runs the SSC because the SSC wouldn't enter till somewhere over in here. But this is essentially a 1, 2, 3 entry, and it's a WMB3 entry, and it's very close to that skin of the dragon entry that I've been woofing about. So that's the one I tried. Just I wanted skin in the game for this idea, so we gave it a try. Now at 2, is what you get if you take the price crossing the dragon and taking out that PSAR dot. You could get an entry at 2. Entry at 3 on this entry, that's actually the SSC entry, and I've mapped out what the standard risk box looks like, the MMRB on each one. Now, if I'm using the chart patterns, this is the entry or the exit that I use as the PSAR flip or the collapsing dragon. So you can see that even on this entry, even on that entry, the MMRB exit is here, but the collapsing dragon, so you're really only risking that much. And then if you set that MMRB equal to 0.2, you're not really taking much risk to your core capital. Now, within 2 bars, this thing crosses the Bollinger Band mean. So by that, if I'm just going to assume that I took the SSC, but even no matter which one you took, by the time you get to here, no matter where your stop was and no matter what your entry was, your stop should be there. So you either went from here to there, or here to there, or here to there. And you're locking in some amount. Check or hold. Yeah, I want you to notice that right here, this little doji holds north of the Bollinger Band mean. So it's like this thing sold off, it got back to the Bollinger Band mean and tested, held, and is now trying to continue. So that's healthy. But when this does not make new highs, I got to decide where do I want my stop. At the no lose plus enter for 2, at the spine of the dragon, or at the Bollinger Band mean. I really need to see it get above the peak of the RL10 to really be positive about this. So I have, from the price right here, I just have this little bit of indecision zone. And then I'm going to pick one of those 3 as my stops. You decide. This is healthy because it did not fail through the Bollinger Band mean. The R10 wiggle happens and continues, and spring turned to summer, and then that's followed by this affirmation. So I want to use that opportunity. So no matter if my stop was here, I probably want to get to a 1-bar low, and now I've locked in at least that much of a gain against probably that much risk. So I'm probably about at 1.5 by here, and now we can breathe a sigh of relief. Notice that you get a confirmation when the RL30, which is this one, which was below the Bollinger Band mean, bottoms out here, so you get an owl right about here. That's an owl entry, by the way. And then the RL30 crosses the middle of the river. That's positive, and now you're not surprised by that move, and now you want to make sure that you preserve these gains. And now you notice that I've got the R10 has started to slope down, the dragon has come into the station, and an exit in that location is excellent, and your gains are something like this compared to a risk of probably like that, which is about 2.5R. Now, on a quiz, if I was going to quiz you on this one, you should be able to explain the significance of every markup. What does each of these red lines mean? What am I looking at here? Why are those 3 entries? What does that mean? Oh, it's the price crossing and testing and holding at the Bollinger Band mean. This is the RL30. This is a R10 wiggle, and it turns to summer. This was the next R10 wiggle. This is the peak. This is a lower high in the R10. This is the skin of the dragon. Either one of those is a skin of the dragon exit. This one is a 2-bar low and spine of the dragon. This is a breakthrough of the dragon. continuing to have lower highs. This is the PSAR exit, and you might actually consider being short there. And if you are short here on a PSAR flip, then your first target is reversion to the mean. It has to get below the Bollinger Band mean. And then your second target would be all the way back to these support levels. So you have two targets for that if it's a short. So your quiz is to be able to explain the significance of all the markups I made, and then your goal is to be in a position where you can see those things without me marking them up. And that's the size of your MMRB in Tesla, which is like $1.25. Okay? So all of these potential exits for all of those potential entries. Look how nice and orderly the PSAR is. It says, what are you working so hard for? Why don't you just take it at the PSAR flip and then use the PSAR guide? There are some times we can get better, but that ain't bad. Let's see. Have we seen this one? Yeah, that's the one we just did. Okay. I think that's that. Let's go to the traders. Sorry, I forgot to open that up. Oh, I think Peter posted these late last night. It's a breakthrough day. Well, let's respect a breakthrough day. Let's see what the young fella has for us, with your permission. These were some from yesterday, so we're going to flash through those pretty quick, but I want to respect the effort and see what we can see. Let me get to the ones that the boys did today, though. I'll come back to Peter. Let's see, which one is this? Oh, that's Peter. All right, so Peter nets 1.5 on the perfect SSC. Second position, quick cut for net 1. I like it. That's perfectly executed. That's good. We should be stopping and reversing here. He nets out a scratch, but there was an opportunity to make a little more bank, but good learning. Nets 0.5. If he takes, he's got it. You got to take this short here. He understands the power of re-entry. Jiminy Christmas. So we've got some work to do on psychology for the exits. We're leaving a lot of money on the table. Re-entry here, there's an SSC here, there's a collapsing dragon there. To George, this is a stop and reverse. If this is a short, that's a stop and reverse that gets paid. Perfectly played. I might have considered a second position somewhere in here You're only around 1 hour, but when you get that second leg down, that can be attractive, but that's a great exit. The stop and reverse is available, as is the PSAR flip here. Once you see those big oscillations and the Z3 pinch expands, this thing is in play, and it can continue to be larger and larger legs. And the size of this leg was the size of that leg. So just saying. Brian brings home 1.8 for the day, gets a nice breakout here. He waits for a full wrist box off of the PSAR flip. Great exit, great short on the PSAR flip covers. Might have played this one. He was out of time, but man, there's about another 3 available there. That's not bad. Mark brings 2.67. His trades are a testimony to the power of specialization and building your cardiovascular system and being able to have no directional bias. You see that he's making money on the short side and the long side. He's identifying every pattern that he wants. He's being pretty strict on where his entries are and respecting the power of the PSARs, not staying wrong too long, and that brings home 2.67. That's good work. Here's another 3 from Mark, and that is only taking that first leg down. When you have a move through the VWAP and the first leg is good, this is such a screaming issue. Yeah, I get it, but you did get paid here. When you get a COTA 2 like that, if it tested the VWAP twice and then breaks it the third time with 2 higher lows, man, that is a screaming COTA 2. Holy smokes. This is also Peter, about minus 0.5. There were other trades available in here. This looks like, yeah, the opening. I like that trade. It looks like, yeah, I'm not sure why your risk box was this way. If you're long here, that risk box should be down there. But I think it was just misplaced. Some learning here that there's some COTA 2s that we're missing. Smashes the collapsing dragon for 2R. That's nice. There's another one. This is the same pattern here on October 20th. So you may be one of specializing in IP. You wouldn't necessarily think of international paper as a great intraday trading target, but the very absence of volatility intra-bar is important. You get those directional moves, that makes this a great intraday trader. That'll be our secret. He picks up another 2R on KRE, the regional banks, with excellence and attention to detail. Another 0.7. Why you missed this, we're not sure, so let's figure out why, because that's a standard short and it would have picked up probably 2 more R. Just some learning and some learning. This short, we stayed too long, and we should get more out of this one when it runs all the way up the Z lines and then starts to collapse. A money management stop may have allowed you to collect more. I appreciate that that is a dragon skin exit, but when you're trying to offset that earlier loss, you might be able to capture more of that as a money management stop. Nice net 1R on this one, and we got to work on our fix that bug. So lots of good work from Peter on that one. Keep posting those charts, and that's pretty good work. Let me pause the tape here just for a second and get the reports open. So today we had the first day of recovery. We had the gap up, and it held pretty well. The absence of sell-off was helpful. This is now day 2 because it closed with a higher low. So a breakout above 425 is a 1, 2, 3 entry in the market. But remember, we still have a downward sloping R10 and dragon. We're not out of the woods. That's simply the first day of recovery after a 5 or 6 day sell-off. So don't don't get ahead of yourself. But it does allow some opportunities tomorrow on the long side. Still sideways volatile. Today was relatively strong compared to the sell-off days. Volatility still favors shorter-term trading. Lots of auto framers available. Lots of RSI2 in single digits. So there are targets that are still at extremes. Microsoft was a big winner today, so I'd be looking for that. Let's see. Pfizer and Travelers both broke down, as did Home Depot and Chevron in terms of making new lows. Real strength in Verizon and Walmart. Walmart, it may be time getting into the holiday season. Who knows? The ETFs had a recovery day today. Still lots of auto framers, but only one symbol, KRE. The regional banks got smoked, which is why I'm still short that one. It's a buyer's market for the auto framer. A mixed bag between big breakouts and harsh sell-offs. So you can look for the winners like Cliff at 300, Walmart, Coke, AI. I especially like AI right now, to be honest. And the trading value, as usual, the top 5, marijuana, Tesla, uranium, clean energy, and NVIDIA. KRE's in the second stack along with Intel. So a lot of things we covered tonight. A lot of good case studies. You should be interested in the WMB3 and how that can help you. Even if you're not taking the entries, they help you stalk. And you can actually see support for a reversal happening so that when the SSC happens, that you're not taken by surprise. That if you have alerts set up for the WMB3 like I do, that gets you into the ballpark of an SSC a couple bars early. And that way you have a chance to refine your entry. All right, that's everything we got for today. We'll get this published and posted. Take good care, and we'll see you tomorrow. And thank you for your patience as I explained the workshops and the structure for next year. I want to try to get this organized. I'm anticipating getting a lot busier once the book hits the streets, and so I wanted to have infrastructure in place to handle increased interest. So first come, first serve. Take good care, and we shall see you tomorrow.